Before Federal Reserve Chairman Alan Greenspan began his report to the U.S. Senate Banking Committee Tuesday, Committee Chairman Paul Sarbanes cited some recent history to address the current economic situation in the United States.
We've seen a significant job decline in the private sector, more than in the previous recession, and we have a worrisome, I think, job situation, resembling in some respects the jobless recovery period after the last recession in 1990 and 91.
In his report, the head of the U.S. Central Bank offered some hope for the world's largest economy. He said it is headed to recovery. Mr. Greenspan added that last year's recession will gradually wear off, and the economy should resume healthy growth.
Imbalances in inventories and capital goods appear largely to have been worked off. Inflation is quite low and is expected to remain so. And productivity growth has been remarkably strong, implying considerable underlying support to household and business spending, as well as potential relief from cost and price pressures.
But Mr. Greenspan also said the U.S. economy is threatened by a loss of consumer confidence. As Mr. Greenspan read his report, stocks fell hard on Wall Street for a second straight day. The Dow Jones Industrial Average fell more than 200 points in morning trading before settling down 160 points. The Nasdaq ended the day down 7 points. Addressing recent high-profile cases of corporate fraud, the Fed chairman said an infectious greed seemed to grip the business community.
Too many corporate executives sought ways to harvest some of those stock market gains. As a result, the highly desirable spread of shareholding and options among business managers perversely created incentives to artificially inflate reported earnings in order to keep stock prices high and rising. Although we may not be able to change the character of corporate officers, we can change behavior through incentives and penalties.
Mr. Greenspan also told the committee the U.S. economy will expand by at least 3.5% this year.
One would perceive between past business cycle